Hello, my name is Russell Myers. Welcome to Issues Unite. All right, so there's been a lot of talk about the precious metals market in the past week or so. And, uh, you know, so what is happening? Why is it happening? And what can you expect to see in the future? And what is the why of all of this? All right, so I've talked about silver and precious metals in the past about how over leveraged the silver's futures market is. What's the difference between silver and the silver futures market? Right. So if you invest in silver, what you're actually doing, if you buy physical silver or gold, whatever precious metal, and you actually order it to be delivered to your possession. Okay, you have bought silver. If you invest in a silver fund, SLV, or in a mining company, what you are investing in is future commodity. It's a commodities market. You're buying silver that has not yet been produced. So if you've got silver in your hand and the price of silver goes up, the value of what you've got in your hand is worth more. If you buy into the futures market, well, you don't really own anything. It doesn't exist yet. Now you can cash in your, investment and demand actual physical delivery of that silver. But if you do that right at this moment, there is no silver to deliver to you. It doesn't exist. You cannot take delivery on something that does not exist. The bullion brokers don't have it to deliver. Okay? So a lot of what has been going on is in the last week or so, a lot of people, now people that invest in physical silver, they're holding on to it. They're not selling it because they know that the value is going to go up. A lot of people, speculators have been investing in, the futures market. But these are speculators. They absolutely intend to buy in and sell in a short period of time. They drove up the SLV value. And now, what is happening today, I will show you. All right, so here we are at JM Bullion, one of the largest bullion dealers in the country. So if you look right here, silver ask. So that is the spot price. In other words, that is the value on the international market for silver per ounce. And you can see that it has dropped by 44% in the last 44 cents in the last 24 hours. Gold has dropped by 38.45 an ounce in the last 24 hours. Let's go to the charts for silver. Okay, so here you go and I'm going to take you through a few pages here. So, I guess that 43 cents is what it's dropped today, but in the last 24 hours, it's dropped by 2 cents. And the last week, it's dropped by 17, 30 days, 6 months, but it's still $8.70 an ounce over where it was 1 year ago. And over $20 an ounce over where it was 32 years ago. So, here's where your problem comes in. And this is what I was referring to. Doesn't matter whether you go to silver, bars, or coins, or whatever. For the most part, unless you have a considerable amount to invest, most of it's out of stock. Look at this, okay? They've got two things that are out of stock right now. If you got $3,000 or whatever, then great. There are not many. There are very few investors that actually invest in physical silver that are selling. So if nobody's selling, look at all the out of stock on here. You go all the way down the line, it's out of stock, out of stock, out of stock. So let's go ahead and go to coins, just to keep in stock silver. Now I want you to pay attention to one thing here. All right, look at the asking price. This is the spot price up here at the top. Look at how much you have to pay if you actually want this. Okay, the lowest you're going to get, that is $31.43. What do you have to do to get that $31.43 price? To get, $31.42, you have to buy 500 plus ounces. If you are buying 1 to 19 ounces, the best price you're going to get is $32.32. $6 an ounce over the spot price. So that is the markup on the silver. That's what the bullion dealers are making as a profit. $6 and more an ounce. JM Bullion has one of the lowest markups available. So why is this so high? Like I said, speculators have been driving this up. Why the speculators bought futures within the last week, and then they turned around and sold it, which made the spot price go down. But, so, what can we expect to see on this in the future? For years, J.P. Morgan was manipulating the price of silver because they owned 80% of the investment grade silver that was on the market. But J.P. Morgan no longer has control over that. So the same people that went after the GameStop thing are now going after the silver market. Why? Because they want to illustrate just how leveraged this market has been. Just how fake all of this is. That it's all being run by hedge funds, by banks, by speculators. That people are not investing in the actual commodity. And they've managed to illustrate this to anybody that's paying attention. If you are paying more, for silver at this moment, that's because the silver futures market has been driven up. But now what's happening is that more and more futures holders, especially smaller ones, are turning around and demanding delivery of the physical silver. So this drives up the markup. It costs the bullion dealers more and more money to locate and procure silver that they can deliver to their customers. It becomes harder and harder, and it's going to get harder and harder as more and more of whatever is in the supply chain gets used, it gets delivered. There's not going to be anything to deliver. So, what's going to happen in the future? Right now, you can absolutely count on the market for precious metals being very volatile. You're going to see a lot more of the value going up, going down, going up, going down. But eventually, more and more investors, actual investors, not speculators, are going to demand delivery of the silver that they have invested in. It is going to take years for mining companies to build up a supply chain. Look how much silver is used in industry, in solar panels, in computers, in, all kinds of modern technology. So the demand for silver keeps on going up, while the supply has remained stagnant and even declined for decades. Mines have been stagnant. They've been shelved. They've been, sealed up. And it's harder to actually get silver than it is gold. Silver is often a byproduct of mining for other minerals. So unless they have sources where they can mine silver, which pretty much they don't, then the demand is going to exceed the supply. Yes, speculators are going to keep doing this with the silver futures market. But eventually, even the futures market is going to flatline, whereas the demand for the physical silver is going to keep rising. It isn't going to happen quickly. Physical silver is a long-term investment. I mean, if you order it, it's going to take at least a couple of weeks before it's delivered to you. If you sell it, it's going to take time for it to get to the dealer and them to inspect it and them to issue a payment. It's usually faster if you're selling than if you're buying. But that's a different story, okay? Because it does have to go through an approval and inspection process. Because they have to make sure that what you're sending them is actually the precious metal. And not something coated. Like a lead coin coated with silver or gold. So, the silver market, it has more demand than the gold market. We can expect to see a tremendous rise in the value of silver in the coming months and years. At least for the next 2 or 3 years, until, even if they identify new sources, well, now they've got to get access to that, and the people and if somebody else owns the access, well, they're going to demand their own, profits from this. And if they know what you're looking for, well, the price just went up. If they know what resources are available there. And then they have to get funding for the equipment, then they have to hire people, then they have to get an entire supply chain going, sometimes build roads into the mining areas while they're destroying our environment in the process. So I've been telling people for years, invest in silver. Now would still be a good time, but invest in physical silver. If you've got to pay a premium for it, pay a premium for it. I expect silver at some point to go to $50 or more per ounce. It's at 26 now. If you pay 32, then, and it goes up to 50, then you will make that much of a profit. So that is what is going on with the silver market right now. Expect it to be very volatile. I'm not advising anybody to invest in the futures market right now, because you don't know whether it's going to go up or down. And if you can't afford to lose, you're just gambling. All right. That's it for this one. Share this video. Talk about these subjects. And if you can, please donate $1 a month to help expand the channel. And I will see you in the next one.